What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you had an alright weekend. Now, I know it was a interesting weekend, to say the least, for Bitcoin. Bitcoin crashing all the way down to almost $17,500. And currently, at the time of making this video, we're hanging out back around the levels just before the weekend. Now, I didn't make any videos over the weekend. Everyone was panicking, asking me where I was. On the video that I left you guys on, I explained to you that on the weekends, we have very, very low liquidity, okay? And it is very easy to move these prices all over the place, which is why I don't take weekend moves very seriously. That being said, however, we did wick very, very low. We got below the 200 weekly, and yes, we did dip below 17,000. So it was certainly a crazy and wild weekend. However, what if I actually told you right now that we could be seeing signals for a Bitcoin bottom? Now, you might be saying, well, haven't all these influencers and analysts been saying that for a while? Yes, however, we are seeing massive confluence on the 13-year Bitcoin chart. So I do want to analyze that. Now, it is important to keep in mind today that it is a holiday. For the first time ever, we're actually celebrating Juneteenth in the United States, which means the stocks, for the first time in history, are actually closed today. So technically, we are still in the weekend, but I do want to bring this video to you because I have a lot of things I want to go over today. Now, there may have been some foul play over the weekend on this Bitcoin price action, and the other thing to point out is not only has Bitcoin been unbelievably correlated to the stocks, but the stock market has actually seen their worst quarter ever. So the situation at hand is definitely getting serious. However, today, ignoring what the Fed is doing, ignoring the inflation, ignoring everything on the news right now, I want to show you some charts, some very interesting technical data. I do want you to make your own opinion on it. However, I think that you might be quite surprised with what the results are. So, that being said, guys, thank you so much for coming back to the channel. Hope you guys are having a wonderful start to your week. And one other thing I want to actually look at real quick, too, is we did talk about the Bitcoin miner capitulation. We know that miners are capitulating. In fact, some of them are turning their machines off. I want to analyze that data, and I want to see just how much pain these guys will actually take before having that true capitulation, because actually some of the data suggests that they are already recovering. So if all that sounds good to you today, we have a lot to go over. 2 days off, massive video today. Make sure you stick around to the end, especially at the end. I think you're going to find a lot of value. If you're not subscribed, well, what are you waiting for, guys? But nevertheless, extreme fear. We are seeing extreme fear in the crypto markets. In fact, if we actually go down here, this is some of the lowest levels we've ever seen. We saw a 6 over the weekend, and the lowest level that we ever saw was on August 22nd, and that was a 5. So basically, in the history of the Fear and Greed Index, this is basically the most fear that we've seen. Now, in all fairness, it is quite an intense sell-off. You know, we've seen the RSI more oversold than it's ever been. We've had the biggest candle move right to the downside in not percentage-wise, but in dollar amounts. So I understand why a lot of people are panicking. However, if we look at what we did, okay, look at this, guys. If we come over here, what did we do? We wicked right here. We wicked below this support, right, at around 19,813. And what happened? We ended up closing above it. And look at this, guys. We're opening the week back above it. So once again, this is why I can't stress enough. Weekends are not the time to be trading, and they're definitely not the time to be freaking out, right? We wanted Wall Street in. We wanted the institutions in. Now they're in, and they're treating it like a traditional asset, right? They are treating it the same way that they treat commodities, and that's why we're seeing those crazy moves on the weekend. Now, I do want to point out that currently, even though we did wick below it, we did close above, okay, this legacy support right here, and at the time of making this video, we are currently sitting above it. So once again, ignoring the past 2 days, ignoring the wick below the level, yes, we did get down to these levels. Was it capitulation truly? We'll get into that, but nevertheless, we are still above these levels. And remember, historically speaking, anytime we fall below this 200 weekly moving average, we usually recover by the end of the week. So that level is sitting at around $22,400, which is telling me that if history was to play out, okay, historically speaking, by the end of this week, we should have Bitcoin above $22,400. Now, if we don't, well, then it would just be another first, right, to add to the list. But currently, we are still in this area, and I am expecting volatility to pick up and then died down towards the end of the year as we come toward this apex, essentially pretty much on the new year, right? Right around January 1st. Now, having a look at this fractal, is it a coincidence? Is it whales playing games? Well, you have to decide that for yourself. But once again, we've taken this, we've pasted it over here. And if we actually zoom out and look what's going on, although it's not exact, okay, it is a fractal, you could see that we are kind of ebb and flowing. Here we went up, here we went down. But once we got up here, we did have that fall. We did fall below the level, right? We knew that this was possible. And we are looking for maybe some consolidation, possibly another fake out to the downside, putting in that triple bottom, right? 1, 2, 3, or, you know, however you look at it. Ultimately, it could be a double bottom, but I mean, right here, we technically didn't actually fall lower than this level, so I would still consider it to be a double bottom. But nevertheless, the biggest question ultimately is, are we in fact starting to bottom out, right? That's the biggest question that everybody's asking right now. If you look right here, obviously the stock market, although it's not open today, did in fact close on a very important resistance, right? All these times we couldn't break above this resistance, and then zooming in here, you know, it is acting as support. So we do have to see what tomorrow holds. But what I want to look at is a few key points of data. Number one, I want to look at the CBBI historical chart. Now, if you don't know what this chart is, it actually is sort of an aggregate of all these different cycle indicators. You have the PUL, the R-HODL ratio, you have the pi cycle top, the Bitcoin Trololo, MVRV, etc., right? And ultimately, what we see is the closer we get to 100, the closer we are assumably at the top. The closer we get to 0, the closer we are possibly to the bottom, right? And you can see right here, when we bottomed out back here in 2015, we had the confidence level down at a 2. Right? We've never actually hit 0, but we've gotten close, right? So we had a 2, and that was an excellent bottom signal, right? If we come over here and we have a look at what we did back in 2019, 2018, we had a confidence level of 3, and that basically signaled the bottom. Now, currently, the confidence level is sitting at 12. So historically speaking, this does tell us that we're not truly at those bottom levels, right? You kind of want that single digit, 2, 3, 4, 5, right? Like I said, we've never seen a 0 or a 1, but right now we are sitting at 12. Now, to put that into perspective, when we did have that first peak, on February 24th, when Bitcoin was coming upwards to 61,000, we had a confidence level up around 78. Now, this was not close to the tops that we had seen, right? Now, it is possible that because we have all of this new money coming in, maybe we never reach those extremes again, right? Maybe we never get to 100, maybe we never get to 0. But what I can tell you right now is we are extremely, extremely low on this level, very, very oversold. And historically speaking, you know, you could see this is some of the lowest levels for the CBBI that we have seen in a very, very long time. This is one potential signal we can take that is letting us know that the bottom could be in. But we shouldn't just stop there. We shouldn't just take one signal, even though this actually is, you know, a combination of a bunch of different signals. But ultimately, we can also just look at the chart simply. Now, the first thing we can talk about is the fact that we've never seen RSI levels this oversold ever in Bitcoin's history. Anytime we get right here around this sort of 30 or 29 area, we usually look for a bounce. Well, as of right now, we're sitting at 26. So as I said, this is the lowest level Bitcoin has ever seen in its history. Now, we could attribute this to what's happening with the Fed and the rates and the inflation and the war, right? These are all things we could attribute it to. But ultimately, we are extremely oversold. But that's just one thing. We shouldn't just stop there, right? We need to look at the bigger picture. So you guys know ultimately that I do use the 21 exponential. It's something we've used on the channel for years, and we knew that once we started to lose that area, right up here, we started losing it right around 42,000. That was where we kind of went into that caution, right? Now, the red level here, the red moving average is the 20 weekly. Now, I want to give a shout out to the Crew University, Crypto Crew guys. They actually pointed this out. Very, very interesting to note. Check this out. So, if you look right here, and I have both of them. I have the 20 and the 21 exponential, but they're almost the same average. You can see they deviate a little bit, but just so that we're getting more of an objective point of view. I don't want to just go on one, right? So you can see right here, essentially, Let's zoom in. So back in when we had the bottom right back here, and the ultimate bottom happened on December 10th, or at least the week of December 10th. And you could see that we had the cross of the 21 exponential right here on the week of December 3rd, and then we had the cross of the 20 on December 10th, right? And if we actually look right here where those crossed, that did signal the bottom. Now, it didn't mean that the bear was over. I mean, you could look at this. We crawled for multiple weeks, right? I mean, this right here was signaled at the end of, or the beginning of December, and we didn't get the pump through it until April of the following year. So we still had a lot of months until we really broke to the upside, but nevertheless, it was signaling that we had the bottom, right? But that's just the last time it happened. Has it happened even before that? Well, let's go back even farther. Let's go back to 2015. You can see right here, most of them, the two moving averages, they were pretty much moving at exactly the same around this area, and that's where we had that cross moving over the 100 again. And you could see that both of those happened right here on the week of January 5th. And literally the next week, right here, we had the bottom. Now, you could say that, oh, there was this wick here that faked people out to the downside, but ultimately, as far as the candle closes are concerned, which is what we're more concerned about, not the, the crazy price action that happens in the middle, you can actually see right here that that did, in fact, signal that the bottom was in. Now, it didn't mean that the bear market was over, right? We continued to go sideways from January 15th, and we weren't able to really break up above those levels until November 15th. So once again, there were still more months of sideways action, but it signaled that the bottom was in or was close to being in within a week, and it let us know that this was the time to start heavily dollar cost averaging, right? So obviously, if we go and have a look at what we're doing today, guys, you could see that we did, in fact, have both of those moving averages moving below the 100, and that was on the week of June 6th. So does that mean that, in the past, we've seen it either happen on the day or the day after? Does that mean that the bottom is in? Well, like I said, if we ignore what's going on in the news, and I'm not saying we should pay attention to what the Fed is doing, we should pay attention to the inflation numbers, but I'm just saying from a technical standpoint, this usually marks the bottom. Once again, as I said, it doesn't mean that we can't go sideways. In fact, we could go sideways, on this pattern for quite some time, even dip below, fake out again, maybe down to the 18K level, have that wick and continue sideways all the way to the end of the year. But historically speaking, these are the moments that everyone waits for the dollar cost averaging, right? And once again, we still do have these Bitfinex longs really having no chill over here. So what I believe is that they are anticipating, based on a lot of this historical data, that even if they, miss the long, they miss the absolute bottom, which most people don't time the absolute bottom. The absolute bottom could have been over the weekend, 17,654, depending on what exchange you were using. That could have been the bottom. We don't know. But historically speaking, this is telling us that the worst could potentially be behind us. Now, I say the worst in the sense of capitulation, downside price action, but the waiting, that could be the worst part for some of you. I mean, could some of you be okay knowing that for the rest of this year, we could just dance along sideways on those levels, right? Now, interestingly enough, I just want to point out this tweet before we get back to it. Heidi Blockchain Chick had said Bitcoin will go well above 100,000 the next bull market, and Adam Back chimed in and said, why not this year? Once the DeFi contagion via WBTC is flushed out, everyone has their pet macro views. My guess, stock market plus U.S. election season, moral hazard kicks up, QE ramps up again, rates drop again, money printer goes into overdrive, so the interest rate overhang falls off, and BTC decorrelates somewhere along the way once DeFi is flushed out. Now, we know that at some point, Bitcoin is going to decouple from the stocks, and you're seeing more and more investors starting to look at Bitcoin as a potential, risk-off asset. But unfortunately, we are not there yet. We're in the very, very early stages. Remember, I made that analogy, if Bitcoin's only 13 years old, think about a 13-year-old human being, right? They're just a teenager, right? They don't even have their license yet. They can't drive. They're making mistakes. The world is still new to them, right? But over time, Bitcoin will mature. 20 years, 25 years, in 30 years. Where do you think Bitcoin could be, right? So getting back again to Bitcoin, we had spoke about the minor capitulation, and we know that every time we get these minor capitulations, we usually have 1 to 3 months until recovery, which kind of would fall in line with some of the recovery that we need to sort of have that full bear market bottom actually bottom out, right? And we know it's not going to be swift, it's not going to be overnight, but we do know that once it does break those key levels, it usually takes off like a rocket. I mean, all it's going to take is the Fed to just come out once, start to pull back a little bit, right? That's it, right? And there is a lot of rumors out there that are saying maybe sometime around September, October, they may actually start to, put the brakes on a little bit and chill out on the raising of rates, right? So that is something to pay attention to, but we will keep our eyes on what the miners are doing. Now, as far as these charts are concerned, is this just something that we're seeing in the technicals? Well, no, because if we actually have a look right now at the Bitcoin hash rate, you can see that right here, it has fallen, right? We were up here at around 221.6, and now we're around 213.9. And there have been reports that some of these miners are in fact turning off their machines. Some of them are actually having some negative days, right? And this is where that capitulation comes into play. Now, I want to give a shout out to Crypto Mags for actually putting this cost of Bitcoin production calculator. I assume it's a website or something you can go to, but she did the heavy lifting for us. You could see that the total cost of production is somewhere around $18,400. So when we were down into that $17,000 level, there were some miners that were mining at a loss. However, the marginal cost of production squared, which usually means after the first is mined to continue the process, is only at around $8,000. So what it's doing is it's flushing out a lot of the newer miners, the guys that are just starting. They don't have the ball rolling, right? They don't have that machine going. They're trying to get their rewards. They're trying to mine the first Bitcoin, and that is costing them a lot of money. So some have chosen to shut off their machines, hence why we're seeing that capitulation. However, the bigger players, the guys that have been mining for a while, these big, huge warehouses, who even knows where they are, that is saying that the marginal cost is around 8,000. So for those guys, we may have to drop below 8,000 to see them truly capitulate, right? Are we going to get to those levels? Probably not. But the point is, we are seeing some of those new guys that came into the space, thought they could just become Bitcoin miners, thought it was just going to be smooth sailing. They're feeling it. They're negative right now, right? So that's why we're seeing the hash rate drop. But this is all part of the process. It's ebb and flow. It is a cycle. And that's why we do have to keep our eyes on the miners. But if you have a look, and this is from Bitcoin Archive, this is a Glassnode data that shows the miner net position changes. And you could see clearly when we're in the red, they are selling. Now, I warned you guys the other day that we were seeing massive selling from the miners. And I told you in my video that they were putting a lot of selling pressure on top of the market. They were trying to cover their costs just in case we were going into a massive crypto winter. Well, just in the few days here, you could see they've started to actually stack Bitcoin again. So this is showing that we got those speculative newer miners out, just like we got the speculative retail out, the speculative Wall Street guys out, everybody that was in it just for a quick flip, for a quick buck. And now that we have a lot of this power going to the guys that have been around for a while, you are seeing that they are, in fact, starting to accumulate Bitcoin again at these levels. So this is all just part of the cycle, and I hope if you're new, you're enjoying this little bit of experience. Now, I did just want to give a shout out to Nicholas Merton, who made a very, very good point over on Twitter. He said, no one's paying attention to the fact that Bitcoin and Ethereum are getting crushed, while altcoins have been neutral or up over the last 6 days. Very interesting. So I do still have a few altcoins that I'm holding, and I keep them in a separate portfolio so that, I keep my, Bitcoin, Ethereum, dollar cash reserve. That's my one. And then my other ones are sort of my speculative portfolio. And that portfolio didn't change much, which I was very shocked to see. Usually when you see a massive dump in Bitcoin, you see a massive sell-off in altcoins. We didn't actually see that. In fact, what's really weird is we saw the Bitcoin dominance start to fall. Now, this was expected, right? I told you we were going to hit this resistance right here. You can go back and watch my videos. I said right around 48%, we're going to hit resistance, literally hit resistance exactly, started pulling back. But is there something bigger? He says, yes, the macro-driven downturn, but someone is purposefully chasing liquidations to exacerbate the sell-off and force players out, right? We saw Three Arrows Capital. We saw a lot of these VCs getting liquidated, getting margin called, and even Celsius. I showed you that video of how they said it might have been La Familia, right? Coming in and trying to short the token, push these guys out. There was a bank run. They were pulling their Bitcoin off exchange, which, by the way, if you have your Bitcoin on exchange, you should definitely pull it off. Look what happened to some of the guys over at Celsius. Shady things happen on exchanges, especially during these very desperate and critical times. Highly recommend you get your crypto off exchange. Get a ledger. That's what I use. I do have a link below if you guys want to check that out. But ultimately, it could have been bigger players taking advantage of the weekend, taking advantage of the lack of liquidity, and trying to push these bigger players out. Now, some people say, well, good, we need that anyway. We need the flush out, right? We need these bigger guys that were speculating and acting irrational with their money. They have to get flushed out. And I agree with you. The same way that we need to flush out some of these garbage tokens, the meme coins, the vegetable DeFis, which, thank goodness, I think that's a thing of the past at this point. But ultimately, that is good for the markets. And what's crazy is even though we have seen Bitcoin dominance fall, you would think it would be going into stable coins. Maybe some of it is, but we've actually seen Tether's market cap drop. Now, Tether, obviously, maybe some people are freaking out because, stable coin, we've seen what happens with stable coins. They're saying Tether is to undertake a full audit by top 12 firm for transparency over the USDT reserves. And currently, at the time of making this video, Tether is still sitting at $1, which is why we're seeing more volume traded in Tether than Bitcoin and Ethereum. If you actually have a look right now, Tether is being the most traded coin. Makes a lot of sense, right? People want to be in stables, but maybe if they still want to do some speculative trading, that's what they're doing. Which actually, side note, guys, if you are looking to trade, if you watched my tutorials on trading, you know that I've explained this, but if you actually are looking to short the markets right now, it does make more sense to short using a stable token than it does to short Bitcoin. I mean, sure, if your long-term goal is to get more Bitcoin, that's what everybody's goal is, that's what my goal is, then you could short using Bitcoin, but if you short using Bitcoin, you'll get more Bitcoin, but the Bitcoin will be worth less, whereas if you short using dollars, you actually get more of those dollars, and then if the price falls, then you can buy back using all of that money, right? So I do recommend shorting with US dollars if that's what you're going to do, USDT. If you're longing, then I prefer to use the asset itself, right? If you guys do obviously want to learn how to trade, you can check the tutorial popping up above. We have over $23,000 in bonuses below, specifically for you guys at the Crypto Zombie community. But following the infamous collapse of Terraform's lab and the stable token, South Korea's prosecution investigators of the company are actually issuing authorities to prevent Terra's key designers from leaving the country. So this situation is escalating, right? And this is sort of the flush out, right? I mean, you guys may have remembered, BitConnect and the scams, right? Every cycle has these. This is just our story this time, but inevitably it will be a thing of the past. But Nayib Bukele, he came out over from El Salvador, and he said, I see that some people are worried or anxious about the Bitcoin market price. My advice is stop looking at the graph and enjoy life. If you invested in Bitcoin, your investment is safe and its value will immensely grow after the bear market. Patience is the key. And I do want to end on this excerpt from Lynn Alden. So she is an equity research analyst, and she talks about why Bitcoin is true innovation. I just want to read these few comments from her. So she talks about Satoshi combining a number of existing technologies, the internet, Merkle tree, proof of work, SHA-256, and ultimately, the Bitcoin innovation is real. There's been a lot of copycats, a lot of scams, a lot of projects that say they're better than Bitcoin. Nevertheless, Bitcoin was the true revolution. And it takes sometimes a cycle to get that through. And I see it all the time. Every cycle, new people come in. Bitcoin is dinosaur tech. It's old money. Nobody cares about it. Look at all these amazing altcoins that are so much better. They're going to change the world. And then what happens? The altcoins fall 90 to 99%, and a new Bitcoin maxi is born every cycle. Now, you guys know I'm not a Bitcoin maximalist, although I'm probably as close to getting to be one as you can be without being one. But I do like to speculate on the altcoins because let's be honest, sometimes you make a lot of money very fast on altcoins, right? Unfortunately, not during these times. So, Satoshi presented the idea like an academic thesis. He was concerned and worried that if it became adopted too early, people wouldn't truly understand. He's in it for the humanitarianism, not the money, although he did say that price would be something that would interest people. He knew that Bitcoin would increase in value over time, and he knew that that would also draw a lot of attention to Bitcoin. However, it was not his initial reason for creating it. She says, I'm a conservative value investor. I mostly buy profitable companies that pay dividends. I'm big into commodities and real estate. I shun most unprofitable growth stocks except for a few small positions, yet I buy Bitcoin. True innovation, very interested in its potential. Bitcoin could fail in a number of ways, but if Bitcoin doesn't fail and continues to maintain key crypto market share, then watch out. Money is a zero-sum contest. Only the deepest, most liquid, most fungible, most portable, most uncensorable, and most resistant to debasement survive. And in that aspect, Bitcoin is leading the way. She says, I have diversified investment portfolios, stocks, cash, bonds, gold, real estate, commodities, and of course, Bitcoin. And Bitcoin is the only one that I think could make a serious difference. Nobody else has a credible answer to the current global monetary problems. It's a Boolean outcome. Now, a Boolean outcome is essentially like it's either true or false, right? So she does believe that it basically there is no middle ground. Like it's either truly going to succeed or it's truly going to fail. And currently, it looks like Bitcoin is in fact succeeding. Now, it might not seem like that right now with the price, but I will tell you, I've been through 6 of these already. I've seen 85% twice. I've seen, 50+%, currently 75% down over the weekend today. It's just another walk in the park. And if you believe in Bitcoin and you know where it's heading, then it's a no-brainer, and signs do point to excellent dollar cost averaging opportunities at these levels. So that's it for me today, guys. Thank you for coming back to the channel. Tomorrow we do have stocks reopening. Then we can really reassess the situation. We've had investors spending the whole weekend. They've had lots of time to think about this, right? So Tuesday could get quite interesting. That is it for me. Thank you for coming back to the channel. Get subscribed, drop a like, drop a comment. I love to hear from you guys. I want your opinion. I love to hear those that agree with me, but I also love to hear those that disagree with me. We're supposed to be a community, and this is a back and forth. It's a two-way street here, right, guys? So thank you again for coming back to the channel. My name's K-Dub. This is Crypto Zombie. Make sure you check out these videos right here, right now. You're missing out on a lot of golden information if you don't. And until next time, stay crypto, and of course, peace out.